Germany is hitting the reset button on its economy. After 2 years of stagnation and with a third year of contraction on the horizon, Berlin is making its biggest economic bet in decades. The government, alongside corporate giants, is rolling out a game-changing plan aimed at reigniting growth, restoring confidence and reclaiming its global edge. Years of capital outflows and underinvestment have left key sectors lagging behind global rivals, especially in tech, clean energy and digital infrastructure. Made for Germany is an attempt to reverse that trend. From Deutsche Bank to Siemens and BMW to Nvidia's 61 industry titans have come together, pledging a massive $734 billion in investments by 2028. The plan channels $350 billion in private investment and $165 billion in public spending into research, infrastructure and innovation. In March, Parliament approved a sweeping fiscal package ending decades of budget restraint. Carmaker BMW is investing $23 billion alone to lead in electric vehicle and battery production. Volkswagen is partnering with North American firms to build gigafactories, while tech giants like SAP and Siemens are accelerating digital growth in a sector expected to expand 5.5% annually through 2030. Germany posted 0.4% growth in the first quarter, but faces a new threat: US tariffs, which could be up to 30%. Trade makes up nearly half of its GDP, raising the question, could the Made for Germany plan survive a global trade shock? Now, to help us answer this, we're joined by Andreas Jacobi in Munich. He's a partner at HSC. Good to have you on the programme with us. Now, after years of falling behind, is this investment plan aggressive enough to truly reverse the decline and make Germany a world leader in tech and clean energy once again?
On paper, yes. So it's a significant investment, especially in correlation with Germany's GDP, and a very important sign to reignite confidence both in the local economy, but also with international investors after years and years of capital leaving the country. However, there's also some questions and unclarity around how much of the pledged investments are actually new investments versus already planned investments that are now repackaged in this deal.
Now, Germany is ending decades of strict budget restraints to pay for this. What are the biggest risks of this historical fiscal shift, and could it backfire on the German economy?
Absolutely. So the biggest risk is overheating without payoff. This comes in the wake of, as you mentioned, several big spending packages, both for local infrastructure as well as defense. So if this overheats and does not go in the right channels and does not lead to broader spending and investments in Germany, that could lead to increased inflation and obviously increased debt.
Right, and with giants like BMW and Volkswagen leading the charge, how will this corporate-driven plan reshape Germany's economy, especially for smaller businesses that are not included in the initiative?
Yeah, so this has been one of the issues with this initiative and one of the criticisms of it, that the backbone of the German economy, which is the German Mittelstand, German SMEs, have been left out of this deal, and it has only been done with large corporates, both national and international. However, restoring the confidence in the German economy and making sure that there will be more investments, both in infrastructure, but also in new offices and within those corporates, trickles down to the SMEs as well. So at the end of the day, everyone benefits.
And of course, with the new wave of US tariffs, can this Made for Germany plan possibly succeed if the country is hit by major trade shocks that target its most vital industries?
So, of course, tariffs will hurt the German economy. 28 billion euros alone go to the US just in the automotive industry, the heart of the German economy. However, this investment package is also geared towards making Germany and the German economy more independent from the US and all those trade shenanigans, which should strengthen also international relationships with other economies worldwide.
Right, we will have to leave it there. Andreas Jacobi, partner at HSC in Munich, thank you very much for being with us.
Thank you for having me.